points on the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I got your watch list coming in at January 28, 2022, and I need to go over the crash indicator for the year. So it's Thursday. The market has been wild, and thankfully it is going to fit here in the format of a watch list, but I'm going to explain what happened today. And if you were watching live on stream, we have an indicator to look out for, and I really think it is going to explain a lot. So I want to go over it. It is the Fed futures rate, and if you guys have watched this channel, we've brought it up, but now, right here, right now, with everything with the rate hikes, Powell, behind the curve, all of that, all the volatility, there is a different way that we need to read it, and I'm going to show you that right here. But there is still another factor that we have to look out for, and pretty much it is the third wave. So this is how we've started the year. Again, it was pretty ugly. It dropped big. We were scared. Then it bounced. We're like, yeah, by the tip, and then we started crying. And the Titanic music, it was bad. But this right here is the second one, and pretty much after yesterday, people are asking about the third wave, the hawkishness, and what Powell left open. It opens up a lot of doors, and a lot of things can happen. So hopefully this video will get you prepared. So we got a lot to talk about. I just wanted to make all of that clear. We are still going to have the company news and events. I got the keys, a slight breakdown of today in the earnings and some of the results, and then the plays that we made, and then the plays for the rest of the week. So right off the bat, big shout out if you've been liking the video and showing love. And honestly, man, if you have been negative and been a hater, I mean, just thank you for your feedback and for watching the stock market live in the trading fraternity, and we will take that into consideration. And yeah, we do have merch. Thank you. But right off the bat, as far as what happened today, the one thing that we're going to bring into tomorrow here, it has everything to do with the earnings. You may not have realized that we are right in the middle of earnings season, and today after hours, 12% of the S&P 500 reported after the bell. So this is going to have an effect. We got some good earnings even this morning. It was kind of a mixed bag again, but the one thing that has been good, the companies, even in the tech space, if they do beat, they have beat very well. So it is a couple of failures out there, but overall, the earnings season is starting to look a little bit better, especially after Apple. And again, Apple went up here after hours, and they make up 6.8% of the S&P 500. So we talked about this in the morning until that 10-point drop happened, but essentially earnings should start to take over again. We'll see the reaction tomorrow after Apple, but what you saw today, it is still the Fed hangover, and that is what is in play. And really, there could be a couple days of digestion. Now, I'm going to go over the prediction from yesterday. I'll tell you what we really need to watch for, but now your first pretty picture, this is literally the link to the crash indicator. So if you go to investing.com/central-bank/Fed-rate/monitor, or you could simply search Fed rate monitor tool, this is what will come up. So you have probably seen this chart before. We've gone over it a lot, and now you need to memorize this. You need to save this link, because I'm telling you, for the rest of the year, this is probably going to be the most important thing. So we talked about it today. If you didn't notice, again, we've brought this up very, very loosely, but the thing about this chart, it has priced in all of the negativity that you've seen up until this moment before the market started reacting. So essentially, there was a lot of people like me, they thought Powell wasn't really going to be that hawkish, but he ended up kind of holding down. And now with him actually liking this signaling to the market, this is going to take the lead. And essentially, I'm expecting the market to get way ahead of Powell. But what we saw today, this is the big crash indicator, or at least one of them this year, and it has to do with a double rate hike. So I brought this up the other day, but watching it after today, this is the most important. So this chart does update every hour. That's what you got to worry about, but we do have it here on Bloomberg, and I was able to go through essentially, if this goes down, that is not good. And this is in reference to the March hikes, but essentially the next big worry, and this will make the market go crazy, I think this is going to be the third wave. It is not going to be about how many rate hikes. That will be part of this. I'll show you that next. But one immediate worry, especially if the market starts pricing way ahead of Powell is that he will have to do a double rate hike instead of just raising by 0.25%, he would actually raise by 0.5%. So that is double hawkish. But a lot of people are saying it now here too. If the market prices it in, there is a very good chance Powell is going to follow through with it. So essentially, all throughout today, anytime the probability of the double rate hike for March went up, that is literally when you saw the market volatility go up. And then essentially at the bottom when we started to bounce, that is where this dropped. So at one point, right before we started dropping, this flashed to 16, and you could kind of see it here on the day. We were a little bit volatile when we started, and then things chilled out, but then all of a sudden that big drop there, that was this going up here to 16, and then it did kind of level out. Little bit of volatility towards the end, but it ended up good, and so did the market. So it may seem very anecdotal, but again, tying this into everything going on, this is going to be a very big key. And now I want you to scroll down and go to December. This is the same Fed futures, the Fed rate monitor tool, and what you need to watch out for here is 1.5 to 1.7, essentially 1.25 to 1.5. This would be 5 rate hikes, and anything above that is 6 or 7. And you can see both of these probabilities today, they went up from the day before, and now this is the next worry, and this is what you got to watch out for. If the market starts guaranteeing the 5th rate hike, that will be bearish, but if we start getting into number 6 or number 7, that is where it gets very crazy. So why I'm saying watch this, why am I even saying it's possible? I don't know, but the market is already starting to price it. But like we said yesterday, I think Powell is going to let the market get ahead of him instead of being behind the market. Then that way, later down the road, if he ends up doing less than 6 or 7 rate hikes, it will be a bullish surprise. But at the very least, he could get people off his back, or at least stop worrying so much about inflation, whereas he's letting the market do its thing and he's responding to them. Again, that's the same logic why if this hits 60, that is going to be a very, very big dangerous zone. So don't forget this. If you have any questions, let me know. If you need it live in real time, come on stream. I am going to be watching this a lot. I mean, we're going to have to take the data and see how it plays out. But today, with especially not that much news, the correlation on it was unreal. So let's see what happens. But as far as everything else, and even my prediction from yesterday, I mean, it really does stand. Again, we talked about this third wave here, and some people think it started today just because we had an up move yesterday, and then today wasn't able to get past the highs, and now that it failed, they think this is the test of new lows. But essentially, I'm not quite sold yet. I think there's going to be a lot of volatility, but like I said, I think we're going to get a little bit more choppiness with a slight downside bias, and this was the big question today. How low do we go in the short term? I really cannot tell you. The only real level that matters is anything below 430 to 420. We tipped 421 on Monday. That was the very, very low, and then that was one of the little fat fingers there from July. So that proved to be a bottom to some degree, but we don't know if it's going to bottom out here, if it'll go there. It could even go lower. It really depends on what happens, and on top of that, it really depends what the market starts pricing. That's why we got to be watching this, but essentially, I'm expecting a lot more choppiness, a little bit more downside, and then hopefully a bounce into next week with the earnings and the Apple news should help it out, or if the rest of the S&P does good, that'll be good. And then after that bounce, whenever that bounce concludes, I think that will initiate the third wave coming into another round of lows. So that's my prediction. We will see what happens. Anything could happen, and one thing you got to realize now, and this is what has people talking, and I just think it's kind of a weird, surreal moment right now where the market is going to start to realize some things, or we're going to see really who takes control in terms of pricing. But the one thing, the bottom line of all of this right now is that Jerome Powell is literally gearing up for one of the largest and fastest tightening cycles ever seen. So there's a lot that could come from it. It is going to be big. They're going to try to work it out, but essentially anything related to this is probably going to be the main driver. We'll see what happens with the earnings, and then we'll see what happens by the end of the year. But coming into the company news and events, I'm going to start here with earnings. There was a lot after hours. Apple, they beat on estimates, and their performance really highlighted them navigating the supply chain crunch really, really well. A lot of people like that, even the analysts. I mean, everything was good. They dropped there after being up in the day, but now they're up about 5% after hours. Let's see the response that we get tomorrow. Then Team Atlassian, they beat, and they gave a forecast above any of the estimates, so it was very, very bullish. I think they're up about 10%. Then CLFD, they rose after beating revenues by 89%, so another very, very bullish earnings. But then Robinhood, they did not do good at all. They missed on revenue, and their guidance for next quarter was below estimates. And then Visa, they got to piggyback off of Visa and MasterCard. They did good. It was an average earnings, but the stock is up about 5 or 6%. And then WDC, Western Digital, they dropped 10%. Their earnings beat, but their forecast was pretty weak. So all of those will be post-earnings plays. Again, it's pretty good. We got a big portion of the S&P today, and then by tomorrow morning, you should see a lot more. And then coming into Home Depot here, they have promoted Ted Decker. He is their current COO, but they have promoted him to CEO, and then Munir is now being replaced after being the CEO for 7 years. So stock was kind of mixed after hours. Again, certain changes you could see a lot, but Munir has outpaced the market since 2014. He has been a very, very good CEO, so we will see what happens. And then coming into Biden in Ukraine, there's a report that the Biden invasion comments are not true, and essentially people are saying that Biden told the Ukrainian president that there is a virtual certainty that Russia was going to invade. The National Security Secretary, they came out and they said that was not true, but he did tell the president of Ukraine there is a distinct possibility that the Russians could invade Ukraine in February. So we talked about this a lot today. You could get very political about it. I think it's actually fascinating. And again, if you guys have followed some of this over the years, again, 2014, 2015, there's a lot going on. But again, now with that statement and talking about February Olympics and all of that, we will see what happens. But I have to keep saying it. The market is willing to move on these headlines. So just be on the lookout for that. But there was that. And then coming into SPAC land, there has now been more SPACs pulled than almost every single year combined. So the sponsors of the SPACs, they have pulled over $4 billion of SPACs so far. They've dropped them. They said they don't want to do that. And you have not seen a number like that. Literally less than like $1 billion a year would ever get pulled. So pretty wild out there. It looks to say a lot about investor sentiment. So we will see what happens. And then finally, Warren Buffett is now richer than Zuckerberg as tech fortune slides. So shout out to the dividends. Okay, you win, Warren. You win. Okay, we get it. But that was pretty much it. There was a lot of different things today. It could have been a lot more confusing, but now with that indicator, things should be pretty clear cut. So we're going to have an exciting end to the month, an exciting beginning for February. So I hope you're ready, but that is pretty much it. So let us get into the plays. So right off the bat, I got 3 stocks that I'm looking at coming into tomorrow, but I got to start with the first play, baby, and that is nothing. You don't be afraid to play nothing. Literally, this is not a bad option to choose. Yes, I need you to stay in the game. You got to be ready, especially when things start to normalize a little bit, but do not force any of the plays, especially with options. It is very, very volatile. To be honest with you, the real move right now is just looking like quick trades. It is still going to be risky. You might find plays that can move up a lot, but in this market, if you take the risky options, they could go up 20, 40, 50, even 100%, but even 50% pretty quickly. That can be good, but you got to flip it quick. Otherwise, if you really want to force a trade right now, you have to buy into the counter trend of what you're feeling. So even then, you could still be wrong. Even the Boeing puts from yesterday, stock dropped another $10. Those puts from yesterday actually went down in value today. Even the Tesla's worst earnings that they've had since Q19, they're down 10%. The option only made 50%, whereas we made 1,000% on one of the Tesla options just a couple of days ago. So there is something about these ups and downs when the range is this big. We kind of saw this at the beginning of the year, if you remember, but just pay attention. Don't force it. If you are, make sure you're quick, or at the very least, if you want to buy a put, don't buy the put when the market is going down. You got to buy it on the counter trend when it's going up, and same thing with the calls there too. So hopefully this helps. Be smart, be wise. I still did make a couple of plays today, but even this morning, I was looking at my pre-earnings. You saw what happened yesterday. We did not have that good of luck. We We did still hit some, but I got to learn a little bit from it, and that's why I was looking at it this morning. I was like, all right, I can't really force it, and it ended up being a good move. So right here, right now, just be cautious with a lot of these plays. Don't let your imagination get the worst of you, and if you have even watched the market move, you're like, oh, I could have done that. I was thinking it, but I didn't. Don't beat yourself up over it, because essentially in the next coming days, it'll probably come back. That's what volatility is. Up, down, up, down, up, down. So just keep that in mind and make sure you're taking your profits out there. But that is your first play. Coming into the second play, I forgot I do have a weekly play on this. Remember, we grabbed it a couple days ago. Those actually managed to come up today. Even same thing with the Netflix, but Apple is definitely going to be an exciting one tomorrow. However, we have to learn from what we saw with Microsoft the other day. So I'm going to be watching this. I think there's going to be a lot of moves, and just don't forget, Apple was the safe haven. This earnings was good, even though it really wasn't supposed to be this good, and a lot of people are feeling upbeat about it. So if this could hold up, it has a big weighting on the spine, all of that, this should be exciting. But pay attention to what happened with Microsoft. Those calls were very expensive. So if anything, I'm going to write out some of my plays tomorrow that we're holding, and then I'm going to wait a little bit before striking on one of the post-earnings plays. But Apple is a big, big move, and this is definitely going to be one there tomorrow. That is the second one. And then coming into the third play, Tesla, don't get mad at me, but pretty much watch for a gap down at any of these levels. If it does gap, I think it needs to. That is what will wake up the contract, and I say it needs to because otherwise, if it kind of goes slowly down, I don't think it's going to be as easy to play. But everything was good for their earnings. I literally read all of the analyst reports following the earnings for Tesla. We read it on stream. Everybody is at buy or overweight, and everyone was very, very positive about it, but they still got a target on their back, and they're still slipping. Again, this was their worst earnings since like second quarter 2019, or as not really the worst earnings, but in terms of stock performance, down 10%. And then we saw Apple do good today, and they were able to go up. I mean, we'll see tomorrow, but this one was definitely surprising. But now they have a target on their back as far as growth stocks holding up. So I'm still holding the call from earnings. That went down 50%. The other put went up 50%. And then the one that we had to average down on from it, that is at break even now. So I'm down with this thing going both ways, but I am really going to watch for that piggy bank level. I mean, we've talked about it, but now it's coming back to there. And essentially, a lot of growth names have dropped well more than 30-40%. I know Tesla's already down, I think, almost 20 or 30 from the top, but if you go look at their chart compared to a lot of others, these are the literal leader of growth. So if we do get that third wave, I do not think Tesla is going to be safe, but we will see what happens. And then finally, Intel, baby. So they dropped today. That was their post earnings. They literally stayed down the whole day. So I'm going to be watching this. We have an old put that came back to life, but be careful on this one because Intel is pretty hard to play. So that's the thing I'm worried about. But if it does break below any of these levels, again, either from now to even the next week or two, if it does go lower, if there is a third wave, this is going to be one to watch because it is approaching multi-year weakness, and those are the ugliest breaks of all. So just watch out for that one. But those are the main plays. As far as everything else, I literally only made 2 other plays today, and I kept it small. I did go for a daily UVXY. This was later in the day.
Employees love the flex.
Man, it's investing tool. Get this out of here. But essentially, I just waited for the counter trend. Again, there was a lot of craziness throughout the day. We gapped up, so anything volatility or downside related, they went down, and you could kind of see relative to the daily, they dropped down, and then you started moving up during the volatility. It brings it back to that awkward point, and then it started to fall. But even though we were down, the options started dropping. Essentially, I was going for the frog. You could see here, the contracts were super expensive here, but then even like right here, they were the same price, even though we were a lot lower than where we were at in the morning. Again, that's time decay and being far out of the money there. So I grabbed 5 of these for 30 cents, $150, and that was just if we get any crazy volatility coming in tomorrow. But look at the IV. It's absolutely insane. So we will see what happens. Then the other play, I put $100 McDonald puts for next week. That was because they had bad earnings, and literally that play just did not move. It didn't matter if McDonald's went up or down. The premium just stayed at break even or like up or down 5%. It was kind of weird. Again, the stock didn't move much, but you would think with the volatility. So So those were the only main plays. As far as everything else, going to be watching all of these earnings continuations. Again, WDC, they did bad. Visa did good. That's one to watch. Tesla, HD, I want to see again with this CEO news. We will see how they take it. Again, it's been a mixed bag, but we have seen a lot of big shakeups, so watch out for that. Watch out for Robinhood. It may trade like Rivian after Rivian hit that low. So they're already very low. Again, even some of the puts, you may end up spending more money on puts when a stock is this low, because you have to realize if you buy a put, the max you can make is if the stock is going down to zero. So if the stock is at $10, literally any put on this chain, the max you are going to make is $10 per share, and that is if the stock goes down to zero. So it doesn't mean there won't be any plays, but I'm just telling you this so that you could be cautious coming into tomorrow. Then Apple, I mean, it's holding up, so we'll watch out for that. Then, depending on the attitude, there was a couple of winners. I mean, I'm still holding my Netflix, and they held up today on the Bill Ackman news. Again, a ton of volume came in. You could even see it comparing it historically. It's actually pretty wild when you look at it. This is one of the bigger volume days, and I even said it today. I mean, with us at like 2018, 2019 prices, if Netflix even stays this low coming into our long-term deposit, I wouldn't even be against adding this to the long-term. So I haven't added to this thing in like 5-6 years, but it is a pretty good price, and I think a lot of people took advantage of that. So our other calls are actually up 68%, believe it or not, even in this volatility, but they held up. Watch out for them. And then, like I'm saying with Ultra, even Ultra and Abivai, there is some names holding up today. So just watch if some of this defensive shifts ends up holding, and then where we go from there, that's going to be a big key to watch. And then Facebook, they're pretty much the final one here besides Amazon, but going to be watching them and even pair that with a little bit of Snapchat, because they will be similar, and this will be a very, very big key to watch. So keep your eye on them. And then Win, this one caught my eye. The premiums are kind of all over the place, but remember, they had good news. They've kind of just been very, very stable here, so we might have to wait for the earnings. But remember, they reported there in like November, a little bit later, so it makes it a little bit more interesting. So keep your eye out for them. And then AMD with all the chip makers, I mean, this was a very, very big liquidation, so we will see what happens. And then finally, TLT and the dollar, it went up today. It could show this is a false move, but just like I'm saying, I wouldn't believe anything you're seeing here until we actually get a breakout. So in a weird way, I'm still kind of biased towards TLT coming down, but we really got to wait and see. And the whole point is now the bond market is in control. Over the last few months, with the market ignoring stuff and Powell going back and forth, really the bond market lost some of its signaling power. But now, if Powell is opening that door and the market's willing to respond, we should see a lot more signal show up through TLT, SHI, the Fed rate monitor tool, and all of that. But we need a big move to happen, or we need some sort of divergence to really confirm what's going on. Otherwise, it's just massive correlation and a lot of things moving around. So don't get lost in the sauce, baby. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet sign. I need you to remember, don't let that spirit break, baby. But the cult loves you. I love you. I will see you in the morning. Let's go.